If you haven't already realized it, we are all in an abusive relationship with Bitcoin because what a week this has been. We have 3 days left on this weekly candle, and we have the most god tier, beautiful, eye watering weekly candle that we've had in a very, very long time. And I'm going to be breaking this down for you because I think that 70k could be back on the cards, new all-time highs could be back in the cards, or maybe we're going to be dipping down and this is all a bull trap and so on. So we're going to be covering all of it in this YouTube video. If you're excited for me, do it a favor. If you're excited for me and the video, do me a favor and smash up those likes. And of course, as usual, please definitely take advantage of the offers these exchanges have given you while they are still available. You can find the links to all of them below if you're interested, and always be mindful of your country's local regulations. A lot of you have been able to benefit from the thousands of dollars in bonuses that Blowfin has been giving, and that is free trading capital that they will load your account up with when you start trading, so it is absolutely sick. But let's come to the video here because we have seen Bitcoin smash back through that $60,000 price level. In fact, if we take a look at how Bitcoin approached this price level, we had a little bit of resistance here in the 59s, but it only lasted, I mean, this was literally just a few hours. It only lasted like 3-4 hours, and then Bitcoin managed to smash through this resistance level, which is absolutely fantastic. On a daily time frame now, we have a beautiful god candle here. This daily candle is the biggest candle we've had in a long time. I mean, this is 12%. The span of this candle body. The previous drop here was a 7% span, and we're measuring these upwards, which is more generous. You know, this one was big, but it was only 6%. We are 12% up today. I mean, when's the last time that we had a candle this big? It wasn't even in July. It wasn't any of these things. You know, maybe this one was comparable at the end of May. Nope, that's 8%. We have not done something like this for a very, very long time, and I think that really tells us a lot. Look, it didn't even happen since the end of February. I mean, I don't think there's been anything really that is anything close to this particular candle in terms of size, which tells us so much about what this could be doing on this chart. And the best thing that we have going for us right now is that we are only 20 minutes away from the daily close at the time of me making this video right now. So you're probably going to know the outcome of this and where this is headed relatively soon. But it is very, very big to see Bitcoin doing this right now, especially at the very, very end of the week. What I want to check, because I haven't actually seen this yet, is, yes, the S&P 500. The S&P 500 has corrected. This is absolutely phenomenal because while the S&P 500 is just forming a kind of, you know, staircase that's probably leading downwards just by the body language of it, doesn't mean it will go down, but the body language of this chart is definitely suggesting that. And by the way, it's already done this a few times, right? These markets, they produce these kind of patterns on different time frames and, you know, different shapes and sizes, but you know, we typically see something that's quite constant, and the S&P is definitely doing that now, right? Where you kind of travel down, consolidate, travel down, consolidate, travel down, consolidate, and obviously these circles are the consolidation zones. So definitely looking poised to be dropping down for the S&P 500. But even if that does happen, as far as Bitcoin is concerned, I think we're still in a really good place for Bitcoin, because if Bitcoin has to start dropping down with the S&P 500 now, and there's nothing necessarily indicating that that is the case, but if it does start happening now, then Bitcoin has a very good starting point compared to the S&P 500. And one of the big things that I was talking to you guys about on this YouTube channel in one of the recent live streams, shout out to those of you that are subscribed to this YouTube channel, because there's a lot of very time sensitive content that we put out here. What I was talking about on that live stream here was that the S&P 500 still has you know, about another, from current price, about another 9% to drop down to its previous all-time high from 2021, and from its all-time high that would be a total drop of about 15%, which is still not enough to put the S&P 500 in a technical bear market according to at least legacy definitions. But you know, so I think that's really, really important to be keeping in mind, because that means the S&P 500 can very easily tolerate a 15% drop and still not be an absolute disaster at all. And that's just a testament to how much the S&P 500 has risen, right? I mean, since the all-time high was broken at the beginning of this year, it took about 6 months to rise up by another 18%, which is pretty aggressive. You know, if we take a look at this, for example, this is May. If we stretch, you know, this here, we're up by 16% across 6 months, and from this all-time high break, we're up by 18%. So we see it, but it's you know, it's aggressive. It's definitely aggressive. So, you know, I think that means that there's a lot more kind of tolerance and leeway for the S&P 500 to keep on dropping. There's obviously, like, support is quite thin up here as well. We didn't really establish much resistance, and naturally, very logically, if you don't have resistance on the way up, you can't really expect support on the way down, and that's why this drop has been so big and so sharp. But again, if that's going to mean that the S&P keeps dropping, well, Bitcoin has a really good starting point if it's going to follow suit. And that doesn't mean it has to follow suit, but obviously we do understand that typically when there's weakness on the S&P, like, you know, the moves that led to this, that is typically when you see weakness on Bitcoin. But, you know, saying all of that, I think we're looking pretty good given the fact that we're back above $60,000. We now obviously have resistance at $64,000, which is going to be this resistance block right here. This is where we were previously finding a little bit of support before we started to tumble down, so it's a very important level. If we take a look at this going back across the entire price range, which, by the way, now that we're back in this price range, I want to give you guys a gentle reminder. We are now 162 days into this price range now. It's been over 5 months officially, so that is fantastic. Congratulations for keeping your sanity if you have it, and I understand if you've lost it. This 64k level has not only served as pretty good support for the market, but also pretty good resistance, so it's a good level overall, in my opinion. It's definitely something which I would, you know, be continuing to pay attention to. I've heard some people starting to dismiss this particular resistance level. You know, look at this, by the way. You can see it kind of serving as really good resistance back here, and, you know, with lots of other attacks throughout this range. I've heard some people starting to brush it off, thinking that it's not going to be super important, and I can understand why. It has been tested many times, but I'm going to keep it on the chart. It looks pretty clean to me. I'm happy to expect a bit of resistance at 64. I'm definitely expecting resistance at 66, and this is still going to be, in my opinion, the level to beat. Now, the last time we got above this level, we faked out, which is the only time in history that that's ever happened, according to this particular range, which is a little bit surprising, but that's completely okay. You know, I think that if the Bitcoin price is able to flip this level again, I'm still going to expect support there, even though we didn't get it last time. You know, being wrong once doesn't make me scared to have the same thesis again. Sometimes anomalies happen. This was clearly an anomalous drop, because even though it was so intense, and it really was intense, by the way, from high to low, this was, bear with, from high to low, this was a 29% move, and it took 5 days. You know, even though it was a very, very intense move, we have retraced back to where we were 5 days ago, right? So, you know, a lot of this is done. We're definitely still, you know, range bound again now. You know, and I think that, you know, 67 is going to be important for that reason. If we do zoom in, though, on the note of being range bound, you know, we need to prove that we truly are range bound and that this isn't, you know, some sort of kind of bull trap that ends up kind of taking us up here, but it doesn't really last, and then we drop back down. And the best way to prove that is to actually send the market lower down into this $60,000 range. This is in my experience. I'm saying the best way to prove this is this, because when you come back down to this particular price zone, now the bears have a chance to drive it lower and do what they wanted to do, but equally the bulls have a chance to be like, what? It's back down to 60. This is really good support. I want to buy it, right? And so when that starts to happen, that's when you start seeing the price move up, and you've, you know, kind of proven that this is now a demand zone again on the market, and you're in a really, really good place. It's a little bit unnecessary to be going particularly deep into Bitcoin analysis right now, in my opinion, because this is very heavily dependent on traditional finance. And again, we're going to come back to that a little bit later on in this video because of that, because you can't really have this discussion unless you're taking that stuff very, very seriously. But I do want to stay locked on Bitcoin right now because some of this stuff is still quite useful to look at. And again, like I said, flipping that 60k level would be great. What's better than that? Flipping 64, right? So if Bitcoin could do something a little bit like this. Oh, hang on. If it could do, bear with. If Bitcoin does something a little bit like this, you know, we're going to be quite happy with that too, right? That's let me draw this out, show you what I mean. That, right? So it's at this point here where, you know, it's pretty hard to deny. You tell me, right? Like we're just having like a normal educated discussion here. If you looked at this chart, where would you feel complete confidence that, you know, we're back in the range and there's no chance that this dips back down, or very, very limited chance? You would probably start feeling that confidence right now. You would start feeling a huge rush of that confidence up here, but you would be absolutely cemented over here, in terms of, you know, just knowing that, you know, look, we've cleared 60k with a more than 5% margin. And like we've gotten more than 5% above the resistance level. We are actually more than 10% above that resistance level, if we go all the way up to 67 for that rejection. And then we've come back down and flipped support, still 5% higher than 60k resistance. So it's a very easy argument to make, and so that's where, like, for me, it would be kind of like the point of no return, like flipping a level like 64, and it just gets better and better the higher you go. So again, you know, and the other thing is that these resistance levels are very mushy now. Like for me now, as far as I'm concerned, is that if Bitcoin truly is back in this range, 64 is there, yes. 66, 67 is there, yes. But I don't think that any of them are going to be particularly big problems, especially after a fake out like this, right? Like, this really validates the market if this is indeed a fake out. Again, we're going to continue to debate if this is actually a fake out in just a minute, because that's the most important question. But if it is actually a fake out and now we're done testing the downside, then, you know, we've got, you know, a big you know, show of support in the market that we're actually able to keep going up. So I'm just looking at 70k, 72k at the top of this range. And again, if we hit that resistance level, same as I was saying back here, if we did manage to hit the resistance level here, I'm going to say the same thing now. I would expect that we break that resistance level with no problem. Now let's move on to support really quickly. If things start getting bad, if Bitcoin starts to dip below this particular level that we're at right now, then of course we do have a little bit of support at $60,000. We have a little bit more at 58, and I want to consider this $58,000 level as being in play. The reason I want to consider this level as being in play is because now we faked out so many times that, in my opinion, this range is starting to widen a little bit. Nobody's really talking about this, but clearly, you know, as early as May, or in fact the very beginning of this range, the 60k level wasn't particularly well respected, and, you know, I'm sure the VPVR would show us this, because if the VPVR does, then that kind of proves what I'm saying really well, that we start to see some nice big volume blocks. Look at this. So if I just move my line slightly lower, you start to see some nice big volume blocks down here, which heavily implies that, you know, there is a liquidity zone here, and so it's very reasonable if Bitcoin were to kind of fall back down to this level and then continue to grab some support. So for me, the point of no return where this market gets really bearish is probably going to be anywhere below $58,000. So I am just going to move this up. I'm going to move this up to 58k there, and I'm going to say that that's kind of my line in the sand. I can tolerate anything up to this particular, or down to this particular price level, but anything lower than this, and I am not happy, and I will be expecting that the market could suffer for that. And if that happens, then obviously your next stop is going to be 52, according to what I'm seeing here. But, you know, we know that it's not phenomenal support. I'm glad that we got the support that we got from this. That's absolutely great, but I'm not going to be expecting a miracle. But I think what's worth keeping in mind with this is that, yeah, we'd probably be looking at dropping slightly lower, down to perhaps $44,000. So that's going to be a key level that I'm going to be looking at in the market as well. I also see 48, and I think 48 is great. We did front run that level a little bit, so I'm not too worried about it anymore. That's kind of tapped as far as I'm concerned. Well, we didn't front run it by about 1.4k, so I think you can definitely make an argument that we front run 48k a little bit. But yeah, I mean, you know, 48k, 44k, these would be the levels that you really want to come down to, because they're the ultimate big liquidity grab zones. It's not even a liquidity grab thing. That this was clearly a liquidity grab. A lot of longs were piling in. We were talking about it on the live streams and stuff, by the way. I mean, we can take a look at this. Maybe they're still very high. I fucking hope not, because it just makes it harder for us to go up. But yeah, the longs are still quite high. They're not as high as they were before. I mean, we had like 71% long a few days ago, right? So you know, and yeah, look at that, consistently in the 70s. Now we're just 62, but 62 is still very high for retail longs. So, you know, and these longs have clearly gotten punished on this move here. You know, there is more liquidity down here, and more longs will get stopped out, but it's also just a beautiful buy zone, right? Everybody knows this. This is where the ETF, you know, kind of became a thing. Back in January, and, you know, it also just, you know, it's a nice big zone. I mean, again, you know, with that beautiful trusted VPVR tool, you're probably going to see a nice kind of spike coming in around here, at the 44. Yeah, this is, look at that, 43.5k. You get the big spike over there. So, you know, as far as support goes, this is like kind of the best support that you've got, you know, kind of 43 up to 47, I guess, according to the VPVR, or the way I'm seeing it, kind of 44 to 48, you know, that's the kind of range that I think, you know, is quite promising for support. Again, I mean, we're literally like, you know, $15,000 away from that, you know, so it's quite far away right now, you know, to be discussing that, but it's worth talking about because it can happen very quickly, and we know why it can happen quickly. We've been talking about it for a long time. These are the best trading opportunities that we see, is that when we start kind of crossing liquidity gaps like this, you move very quickly, right? So even on our fake out previously, we still moved really quickly. We nearly fell down to 52k. In fact, we got so close that many people were actually arguing that we front run it. You know, and this was, I mean, an incredibly quick move. You know, to put it in perspective, within a matter of just 4 days, 4 or 5 days, you're down by 16%. Over here, again, it was 5 days, you're down by 30%. So, you know, the price moves happen really quickly when you leave these kind of liquidity gaps, liquidity zones. You kind of have to very quickly travel to the next one. It's kind of like, you know, traveling in a vacuum, like light. Here's a, let's do a light refraction per swimming pool. And we can bring a little science into this. And I don't know why the hell I'm doing this, but fuck it, this is what you guys get. You know, and it's the same concept here, right? When you're going through, you know, a zone which is a little bit more solid, you know, a little bit more dense, you're going to travel a bit slower. And when you go into a zone which is a lot less dense, like the air, you're going to travel a lot faster, and it's the exact same concept in the market. So I don't know what the hell you guys are subscribed to me for, but there you go. You get what you get. If you appreciate that, do me a favor and smash up those likes. And of course, double check that you are subscribed. And you know, while you're down there, the beautiful thing about this is that these are the gaps that are very easy to trade, right? So you know, 50k down to 60k down to 52. Hey, can you take care of this? 60k down to 52, you know, is a very clear support level, you know, a very clear gap that we might expect Bitcoin to travel through quickly. But the same thing applies up to 64k. And, you know, that means that these are kind of easy gaps that can be traded as well. And again, you can see just how quickly Bitcoin has moved between these ranges, right? I mean, we're getting a nice 4% pump there within, you know, literally less than a day. We're getting dumps happening very quickly. Look, I mean, you know, just look at the candles here. You got 2 daily candles, and you've completely covered this entire price zone, right? So these moves happen quickly in these price ranges. Look, this one was all 1 day over here. This one was, again, just 2 days. Like, Bitcoin moves quickly between the 60 and 64k range, so I don't expect us to be hanging around here for long. And it also means very, very clearly, in my opinion, that these are, you know, further great trading opportunities. So I don't know if you're still down in the description, like I mentioned a minute ago, but while you are down there, like I said, phenomenal opportunities with these exchanges linked below. Apex is a DEX from Bybit, which is super, super cool. So those of you interested in decentralized finance, you might be interested in Apex. And of course, Blowfin is a phenomenal no KYC platform, which is you know, which means that they don't ask for a picture of yourself or your passport. So that's, you know, potentially interesting, and yeah, thousands of dollars in bonuses. But again, as usual, definitely make sure that your country has not banned these exchanges before you use them, because they are banned in some countries around the world. Okay, so be careful of your country's local regulations. But yeah, phenomenal trading opportunities, lots of free capital, which is always useful. Like I said, I wish I could, you know, take advantage of that free money, because it's just, you know, it just sets you ahead ultimately. I mean, what we aim for as traders, and I think a lot of people, I didn't show you the description, but what we aim for as traders, which I think a lot of people really don't understand, is we're not necessarily, look, we'll take the home runs if they come, but we're not necessarily looking for them, and we're certainly not reliant on them. What we're looking for as traders is simply a compounded effect, right? Like, a lot of people get this wrong, and this is why they don't make money, but this doesn't have to continue. In your story, if it's you. You know, when you're in the property game, you want to get your 8% return per month. I'm sorry, per year. Imagine if it was per month. And that 8% is not impressive in isolation. It's not impressive after 2 or 3 or 4 years. It literally only becomes impressive after 25 years. And we can, you know, we can take a look at this. If you've got a starting balance of $100 in your property, and you have earned 1.08 to the power of 5, so you've done this 5 years in a row, your $100 is now worth 150. It's okay, right? It's fine. But when you've done it for 25 years, you've pulled a 7 times return. Okay, so a 7 times return in 25 years is good. You're still going to beat inflation and stuff like that. You're making money. So we understand that 8% comes every year for 25 years, you know, give or take, because, you know, recessions and stuff. You know, now let's imagine that instead of taking 25 years to instead of achieving 8% 25 times across 25 years, we can achieve 8% 25 times across 3 months or across 1 year. You know, that's what we're aiming for as traders, and I think a lot of people mess this up. It is so easy to make an 8% profit in these markets. It's also very easy to lose 8%, obviously, but I want to put this in perspective for you. Any buyers interested in buying Bitcoin down here or selling Bitcoin up here are instantly given a 6% price range on the upside and a roughly 6 or whatever, depending on how you draw it, percent price range on the downside. And that's before any leverage is applied, right? So anybody using leverage is going to be able to, and very easily you can justify, I would be able to justify leverage numbers like, 5x, let's say, easily. I mean, that's a walk in the park. 30% profit. I've already achieved 8% multiple times. A lot of people, they stumble over themselves looking for that fucking meme coin that's going to explode and make them the 10,000%. And that's good, right? You take it if it comes. And if you're paying attention and you're doing things right, you probably will hit it. I've seen a lot of people do it. It's very, very possible. You probably won't do it as well. It really depends on the person. But this is a really big thing to keep in mind. That shit is not reproducible. It's not predictable. It doesn't give you any substance that you can rely on in your life. And that's the problem. What I'm talking about here, just looking at these kind of price ranges, they're in front of you all the time. They're very regularly accessible. They're relatively easy to devise trading plans on, at least for me as somebody who's, granted I've been in this game for 7 years now, but, they're quite easy setups to be taking advantage of, right? They're quite obvious. Many of you have probably already thought about it. So, when you're looking at setups like that, these gains become a lot easier to kind of pull in. And then, just keep your eyes locked to the long game, bro. You got a 7 times return here with 25 of these gains. Now, granted, this is imagining that you don't lose money, and, it's not going to work like this in real life. But the point is that this is very, very doable. It's been done before many, many times. And I think what would benefit so many people is if they just got off their fucking high horse for a minute. They just chill out, sit down, grab a fucking seat, mate. Just sit down, look at the, touch some grass, relax, and just aim for smaller, more reproducible profits. I think a lot of people would make more money. I don't know if that's you, but I sure as hell know that this is something that if I did more of, oh my god, it would have been so good. Because the other thing that people forget is, now that the reason that this is so good across 25 years is because 8% on $100 is no big deal, but 8% on $600 is a big deal, right? If you make 8% on $100, you get paid $8. If you make 8% on $600, you've made, I don't know, I'm horrible at math. You made like $40. So you're making so much more, and so it's a cost of time. This is the other big element that people don't understand. You're paying a ridiculously large time cost if you're messing up your trading and stuff like that, because you can't tap into that higher compounding profit, power, beauty, all of that stuff. So, as far as ranges go, like I said, support down here, support down a little bit lower, like 44, 48. We got a little bit of support at 60. We got resistance up ahead at 64. I think we flipped this range, and we're conclusively back in this range if we find support at 60k, or if we find support at 64 after flipping it, or if we just get above 64, that would also be pretty good. Attacking 70k means I think that we're looking at all-time highs, and above all-time highs, I mean, look, the last time that we had a range that was like this, it wasn't as bad as this, but it was 226 days. We've now reached about 160 days, so we're nearly there, right? I mean, that's like 75% of the time, and that breakout from the breakout point to the high was a 136% move, and let's say that we only have, like I said, 76% of the time we've spent in this range, so let's say we only have 76% of that profit. So let's say it's, I don't know, I'm just ballparking here, but let's say it's 85%. You're still looking at a, I think, relatively reasonable, realistic target of $132,000. Smash up the likes for that. It looks realistic. I don't care about the hype. I really could not care less, but it looks realistic to me. We've been consolidating for a long time. We haven't been able to punch above that all-time high. If we do, it's not a guarantee, but if we do, I can't see how this thing stops anytime soon. I think it is basically, I can't use big words, but I think it is pretty clear to me at this stage that if Bitcoin does manage to get back above its previous all-time high, that is it. You're looking at another set of price action, which is probably going to resemble this, which, to put it in perspective, from the time that it got really crazy until the time that it peaked, you're looking at 5 months and you're up by 2.3x. It is a big, big gain. So, I think we're going to get paid. I might be wrong. I don't know. But that's how I feel about all of that. Ladies and gentlemen, I hope you have enjoyed this video. A little bit of a different one. We even had a cheeky little physics lesson. So there you go. And right there from the BBC, the world's most unbiased government-funded organization that requires British people to pay TV licenses. I'm going to leave it there. Cheers.